The United States has attacked Iran, and the conflict seems to be escalating. And it's going to have an impact on several things in the United States, one of those being the stock market. And what we're going to do today in the Sunday setup is explore how potentially this will impact the markets so that you are prepared for the week ahead. And we got the news that the United States and Israel had attacked Iran. And you can see here, Trump says attack could last 4 weeks as death toll rises across the Middle East. First and foremost, I want to start this video just by wishing for peace and praying for the safety of American soldiers. This is bigger than the stock market, obviously, anything like this. So I wanted to put that out there to begin. But we also want to look at this from the lens of how is this going to impact markets? What can we anticipate? What has happened in the past when there have been these types of conflicts? SPX chart, and I'm going to go back to June 21st of this summer, because that was a time when the United States did launch an attack on Iran, not to this scale, but you could see that there was already some weakness, a bit of a drawdown, a push down into that attack. And that occurred over the weekend. And you could see that following that drop down lower, you could see here on Monday, the market, you could see following that push lower, you could see that the market actually did push and make lows deeper than that Friday. There was a push higher coming out of that. And so typically you'll get an initial response in the market where there's pressure to the downside, things will sell off. But depending on whether or not the conflict is contained, it doesn't pull in other countries, it doesn't have a long duration, the market should rebound. And in fact, war can be somewhat bullish for the markets. So that's what happened with the SPX. Now let's go look at Bitcoin, because on Bitcoin, we are able to see what happened in those after hour times. So let me come back here to June 21st so you can see what the drop looked like. Just give me 1 second to do that. So right here is June 21st. So let's come over to Friday. So you could see a spike in Bitcoin that Friday, but after it hit that peak, let's measure this out. We could see that it dropped down 8,300 points. But again, it hit its bottom there Sunday, June 25th at 5 p.m. It started to push higher, drew back down again here at 3 p.m. on Monday, and then started to climb out. Again, typically the response, like I said, that we see with war is there's an initial shock, an initial drop, and then markets do recover, but it's all going to depend on the duration, the intensity, the severity of this conflict that we have. So if this is something that's short-lived, that is not going to last for a long period of time, then we won't see such a significant impact on the markets that will last for an extended duration. But we have no way of knowing that yet. And the other thing that I want to show here, let's come over to a 5-minute chart, because this war started over the weekend when markets were closed, but Bitcoin is open. So you can see here Friday at 4 a.m., you can see the markets start to fall. We had a weekday in the markets on Friday. But let's go over to, let's see, that's 9:50. Let's get to, so here's midnight on Friday, right here. So this is when we flip into Saturday, and you could see the big drop that occurred from here. So if we measure this out, Bitcoin dropped 2,600 points. Now, what's interesting is it got down to a low of 62,000, and then it rebounded from there. But notice that after that rebound, that it started selling back down, and it is currently selling back down. So this is going to be an interesting open on futures to see what actually happens here, what plays out. But the positive response that came back into Bitcoin has now gone. So let's see if this thing wants to grind lower and if we were going to open with a gap down. And honestly, it's with this type of negative catalyst out there, things are going to be thrown out of whack. And if anything, what we are going to see tomorrow is more than likely we're going to open with some type of gap down. We're probably going to see a spike in oil prices just with Iran's connection to oil. And so we're probably going to see the VIX spike. We're probably going to see flight to safety. We're going to see people moving into TLT and into bonds. And we're going to see stocks take a hit. And we've been talking about for quite some time that the fact that we've been range bound really since October and moving sideways and unable to break out, that we needed some type of catalyst to reset the market. The catalyst is here. And so we might be set up for a potential gap down tomorrow. And so if we just look at the SPX, we can see that a 5% pullback is quite a ways off from where we are now. That would take us all the way down to 66.5141 price levels that we were at back in November of this past year. And we could see that we have the 200 simple moving average right here at 65.5993. So we would watch that area, and that it's probably not going to be one big gap down to the 200. We may get close to a 5% pullback tomorrow if we gap down. And if we come down to that 200, that's going to be the result of weakness and pressure on the market over a period of time and not just one fell swoop. The other thing I want to point out too is just watching these December lows here. And if we come down to 5%, that's going to put us below the December lows, which is at 67.2016. And typically, if you break below the December lows, that doesn't forecast well bullish for the remainder of the year. So just keep an eye on that area to see if buyers come in here. And again, that is not 5%. In fact, if we measure out from the all-time high here on the SPX down to those December lows, we're looking at about a 4% drop. And if we come down below that, again, we'll taking out that December low, that could spell a little bit of trouble for the market in the interim. And the same thing here, if we're looking at the Qs, more than likely we're going to gap down here. There's probably a good chance we can hit this 200. You can see where a 10% correction is here on the Qs at 572.43. You have a gap fill down here at 565.89. And we also have that 50 simple moving average on the weekly here as well. So just key areas that we want to pay attention to. And then just taking a look at the Dow Jones, we did close below that 50 here on Friday. You do have the 100 here. This would be the first area of support we watched to the downside. And then on IWM, same thing. Now this will probably sell off pretty quickly here. But again, watching that first layer of support here at the 100, and you could see that a 10% correction on IWM would bring us down to 244.29. And then probably what we'll continue to see here too is TLT is going to spike higher because you're going to have people moving into bonds. This is a safe play. So this gap at 91.02 is going to get filled. We'll see what happens from there. And then the money flowing into bonds will probably continue to pressure the 10-year to the downside. And you can see that we are below all the moving averages, and we are nearly below the lows that we put in here from October. If you come over to the weekly, you can see that we're below the 200 simple moving average on the weekly. And then if we shift over to the monthly, we're nearly down to that 50 on the monthly, which we haven't touched that in quite some time. So that more than likely we'll see more pressure here on the 10-year if money is flowing into bonds. And then taking a look at the dollar, we do have this beautiful head and shoulders pattern. We retested the neckline, but war is going to strengthen the dollar. So we're more than likely going to see this gap up tomorrow. So keep an eye on that. And then the mighty VIX, these higher lows that it's been putting in, this thing is going to spike probably at least up to 23 or higher tomorrow. And then let's see if that volatility stays elevated depending on what happens here with this conflict. And then when we talk about gold, be ready to see a huge spike in gold here. It's kind of just been hanging out and moving sideways, but this one looks like it wants to push up, and it definitely can. Again, really, to look at individual charts, being that we have this negative catalyst out there, we're really looking at how the market's going to move to the downside, and when do buyers step in? That's going to be the big question. When do they feel confident? And if you see a positive response, buyers stepping in immediately, that means that they don't believe that this is going to be a long, drawn out conflict. So that would be a positive. But again, we have to see as these things unfold. So I'm not going to be going into all the different charts here this week. I will just briefly go over the data that we're going to get for this week, being ISM manufacturing PMI, that's going to drop at 10 a.m. on Monday. And then on Wednesday, we're going to get the ISM services PMI. So there's going to be two pretty big pieces of data that we'll get related to the healthy economy. And then on Friday, we're going to get non-farm payrolls and retail sales and the unemployment rate. So we'll get some insight into the health of the labor market. And then in terms of earnings, the biggest earnings report this week is going to come from Broadcom. They are going to be reporting on Wednesday. We'll see, again, if things are pressured to the downside, then that's going to set Broadcom up for a move lower. And really, just with this negative catalyst that's out there, what are we going to watch for? We're just watching for downside targets here. So we'll just go through the Mag 9 about what potentially can happen. And you can see here on NVDA, drop down off of its earnings. You have the 200 right here, but you also have that 50 SMA weekly. So we want to watch both of those to see where buyers step in or if they're going to let this thing fall lower. Broadcom has the 50 SMA weekly here at 296.08, which it's bounced off of that here on February 4th. And you do have this unfilled gap at 254.06 that we want to keep an eye on. Tesla has the 200 right below here. You have an unfilled gap. So you have two areas of support where buyers can come in. So we definitely want to keep an eye on those. And then Netflix had this huge gap up. We'll probably see a little retracement inside of this hammer candle here on that good volume. You probably will still continue to see flows into this because it's been beat up so much. This one might not take as big of a shot as some of the other Mag 9 have. So I'm looking, if anything, just retracing in between the 100 and the 50 there. And then you have Microsoft. Again, we have an unfilled gap down here to 367.39. So let's see if that one wants to get filled to the downside. Amazon, we have two unfilled gaps here, one at 194.57, one at 176.84. Let's see if those two get filled here. And then Google, the 100 has served as a strong support, but more than likely this is going to pop down here. You have a gap fill at 262.30. Things would really have to go off the rails for that to get filled, but just to keep that in mind. And then Apple, big chunk of selling came in here on Friday, but we do have this supportive trend line that's been established, and we have multiple touch points here. And surprisingly, Apple serves as a bit of a flight to safety trade whenever things like this happen. So watch to see if some bids come in on Apple here, because they potentially can. So I'll be watching to see if that occurs. And then we take a look at Meta. I do like this chart. For Meta long term, you could see that it established this trend line back in April of last year. We've been bouncing off of it. We've been making higher lows. But again, with what's happening right now with this conflict with Iran, keep in mind that you do have gaps to fill 549.32 and also down here at 506.26. So really, the summary right now that I could give you guys is just with this negative catalyst out there, we are more than likely going to get a flush to the downside. And it's just knowing these key areas below to identify to where buyers can potentially step in. This should not be something that triggers a bear market. In fact, if anything, this will speed up a drop to reset valuations, which is healthy for the market. But again, we just have to see the severity, the duration of this conflict and how it is resolved. So look for, more than likely, a gap down to start and then for that dip to get bought up. That's more often than not, that's how these things play out. And then from there, we just have to monitor how this conflict unfolds. If it gets resolved quickly, then that's positive. So we'll see. This is definitely a unique start to the month of March. So there you have it. Today's Sunday setup. Again, prayers, peace, love out there to everyone, praying for the safety of troops here in the United States, praying for peace for everyone. And let's hope that this conflict is resolved very quickly. But that's the setup here. Again, we'll see what type of impact that this has. And like I said, that you typically have a gap down and the dip gets bought up. But let's see how this conflict gets resolved, if it gets resolved pretty quickly or if it continues to drag on, because that will dictate where we head from here. So that's what I got for you guys. And in spite of all of this hanging over the country right now, we still have that obligation to keep it positive. So let's make it a great day. Let's honor the moment. And most importantly, let's be grateful. Thank you so much for joining me for the Sunday setup. I will see you later this week with more content. Take care.